Alright, Dave Knight here at Knight Capital Management. Thanks for watching. Thanks for being here. I want to take a look. I know I got a very short amount of time here on YouTube. Uh, this is a replay from Tuesday, July 26, 2011, which produced two outstanding trades, but I really want to concentrate on the long signal that came in the market as opposed to the short signal today. And also want to take advantage and show you a few things here. Now, the crude oil market's open outcry starts at 9 o'clock a.m. Eastern Time, and you'll see that the volume starts kicking in after the 9 o'clock area or so forth. Now, if I was purely looking for a signal, now notice I fast forwarded off to 9:10 on a 5-minute chart. Notice that we broke underneath this trend line that we had in the charts. Also, we closed right on top of this little area of resistance and support. This actually produced a nice signal right here to short it right at this point. Roughly, maybe even taking the low of this bar, less a couple ticks. Let me slow it down a little bit here. So, waiting for a close underneath here, around 99.17 or so. Maybe even a little bit less, maybe 15 or so. But let's say that looking at a low, less a couple ticks here, maybe 2 to 5 ticks, depending upon what you're looking to accomplish in the market itself. But so now if we would just take this little trade on here and waiting for it, and let's go ahead and take a look and see what happens here. See, there's your fill coming in the market right there. Very big escalation down. No reason to come out of this trade, and all they're right here. Stop. Let's stop. So now if I look at this area, right in this area right through here, we can see that we got really close to our yellow line, which is the lower average daily range that I have on the market itself. Usually I look for a certain percentage or tick value for a complete exit. Now notice this trade here coming into 99.17, and just if we take, let's say we would catch the bottom for some strange reason, that we would catch that even 97.99 close. Let's say that we get the 97.99 close, we just come out right around this area right here. Just on one contract by itself, looking at, I don't know, I'm just roughly figuring $1,100 right there, just on one contract itself. Not a very, very nice movement here. This starts at 9, well, you get filled around 9.25, and let's say you came out right here at 9.50 as this bar closes and whatnot. So definitely worth $1,000 a pop here. But I really want to concentrate on the long signal once again and go through that. So let me fast forward to that period of time. Well, actually, we're really close to it. We received a signal in our particular strategy. Let me fast up this a little bit. Right here at 9:10, we see that we have this little area right here kicking in. But I want to also notice one thing. This is with the dollar index here too. We see a double spike reversal, actually 3. We're seeing our CCI going in an ascending area here. Say looking higher lows, right? On the coming across this board. We're looking at our volume, blow off volume here, and all of a sudden the volume is descending. Usually think about volume descending like this as a weakness in the market, but when you see the CCI coming back this way, you're thinking perhaps the bottom set in, and it's worth a probe on that bottom side. So meaning that we're looking for the market to take back the other direction. So if I would take this particular market and say, all right, I want to trade 10 contracts, for instance, in this particular market, and I'm looking at 98.11, and I want to come in, let's just say that I want to come in at 98, maybe even a couple higher ticks than this one right here. See, that's 98.14. We're looking to go long here at 98.16 or so forth. So let me go ahead and put this entry in. So here I am putting the order in here at 98.16. I want to go ahead and put a stop in the market here. I want to buy 10 and I'm going to go ahead and place my order into the market here. So let me go ahead and get the charts rolling again. I actually want to slow it down here a little bit. So now it's asking my profit target. I'm just going to ignore this for now. Although we can go ahead and put a stop loss in if we want to head and do that, our profit target. But I'm going to go ahead and cancel this for now. Notice I have open equity on 10 right now. If we would take a look at this particular market, I would have sold off at least half the contracts up against this area right through here. So what I want to do here is get ready here. Let me see if I can do this particular. It's not exactly what I want to do with this particular. Let me do this a different direction here. I know that's what 3,700 on 10 contracts, whippity ding dong. But we said that we had an entry here, and let's go back through this particular trade here. We see that we had an entry point coming around that 1010 mark, and we said we wanted to be in at 98.16 on this long signal coming in. See that we got filled right here. Now if I take my spreadsheet that we use in our room here, we notice that today's ADR, our proprietary information for our stop loss, is 24. We notice that our 1P target is 30 ticks from here, 60, 90, and so forth. Now what I want to do, let's say I want to knock out 4, 4, and then let 2 run, right? So on 1P, I want to come out at 98.16 plus 30 ticks more. So that'd be 26, 36, 46. So around 98.46, I'm looking to get out roughly of 4 out of 10, 40% of my contracts right in this area right through here. Now if I continue to keep going forward on this trade, our next exit point would be 50, 60, 76, and I want to unload another amount of my contracts, another 4 contracts. I'm going to get rid of 80% of all my contracts if it gets here to 98.76. So there you can see it did hit that. Let me just stop that. Now this is ticking in at 5 minutes at a time. So between this entry here, actually from the moment we came in at 10:11 and our first exit here at 10:45, I actually want to show you one other thing I thought was quite interesting for this particular trade on this day, is that maybe even a better entry for this particular trade would have kicked in as the dollar index closes under its 50 bar MA on the 5-minute chart right in here, giving you a nice little signal roughly at this area right here, 10:35, and then showing a signal to go ahead. And notice that we're trying to trade this amount right here. This is the 200 bar MA on the daily chart, so it's a 200 bar moving average on the daily chart, and right here we're looking at the 5-minute bar on the moving average. This is the high of the previous day, and this is basically the area on the upside that we're going. Notice that we come down here. This doesn't happen often, a lot of times, but see that it comes down, and now we're looking to take this. It is Tuesday, turnaround Tuesday. Now we knocked out 4 here at 46. We've knocked out another 4 at 76, and now we'd say we have 2 on at a rabbit right now. Somewhere along this line for it to take us out of the trade. Watching for an area, pretty much looking for it. Okay, here was let's pause it real quick. Notice that this bar comes down low, but no support here. This would be a great place to maybe get the rest of your contracts at some point to break even, or moving here to capture some of this move here, right? 99.13. Notice that we're in here at 98.16. Now we could lock in at least $1,000 at this point with everything that's left over, right? So we got 2 contracts rolling right now, and you got $2,000 sitting here on after that 10. You knocked off 80% of the trade. You let the other 20% go, or you can knock out 90% and let 10% go. That's totally up to you. So we're pretty much looking for an exit on this trade right now according to strategy. Once again, no here. Okay, let's pause because this looks like it may be an exit. So 54, and let's take less 10 ticks here, and that would take you an exit out at 44. So if we get 99.44 or less, we want to go ahead and remove all our contracts. Let's just say we want to get rid of all our contracts right there at that level right there. So what we're doing is looking for this market. There it is. It went and ran our stop and our profit target, our last profit objective here. Now, what was interesting about this day is that this market looked like it wanted to run to at least 100, at least on a minimum. So maybe you wouldn't take one off here and then you let another one run. Maybe you don't. Now, this is totally up to you. Maybe you actually find another buy signal, which is what I'd highly recommend. It actually produced another buy signal here, right here. Stop. Let me stop this right in this area. Notice that the buy signal comes into the market right around this area, right through here. So producing another, this was just a beautiful setup here. This would have been your third signal. So notice that we had a short to start with, a long through here, covering everything. And then you see another signal that perhaps you could take ahead. And just since you got a lot of win here, maybe at this point you traded 10 here, reducing contract size to 5 or even less. So go with half your size this time around. So you're risking half of your profit perhaps. Or 5 times 24, 240, that was about 240, 1200, 1,240 roughly. It was just a beautiful day today. It was up to 100.3, keeps running. Right in here is where the nice exit point would come in when you finally run the upper average daily range, and then you see this white or green start closing underneath here. This is an excellent point to get out of this trade. So anyway, I hope that helps you. Taking a look at particular trades, and when you're not trying to catch the bottom of a trade, not trying to catch the top of a trade, you're just trying to catch a little of the middle, profit with the trend inside. Now, not every day is a trend day, but you can find this particular trade here, if 10 contracts, I mean, just a ton of money. If you would have just held on the whole time, you're looking at, man, just if you were trading one contract, 1,100 on the down, 2,500 on the up, looking at, oh, it's a lot of money on the table on one particular trading day. Well, so in other words, like Jesse Livermore, why would you trade the narrow range inside the middle? He didn't want to do that. Why should you? There's plenty of profit to be made inside of a trend. Find the trend, move along with it, get out when there is no trend, and get into it when there is a trend. Get back out of it with a no trend, get back in with a trend. That's the better way to trade. All right, Dave Knight here at Knight Capital Management. Hope you enjoyed this. We'll take care. We'll see you and talk to you soon. Bye now.